and gentlemen. This is Barry Norman on behalf of Alvexo, and welcome to our webinar this evening on Japanese candlesticks. Now, Alvexo is one of the world's leading providers of Forex and CFD trading. And Alvexo is a regulated provider. So during class, if you wish, you can go to www.alvexo.com and open up a demo account with them. There's no credit card required. And if you can't access their site, if it's blocked, it means that they're not regulated in your home country and they only offer trading where they are regulated. They have one of the most amazing web traders available in the marketplace, as well as MT4, which you can download and use also. They push out signals directly to their platform that you can use. They're free of charge. They have an 88% accuracy rating, and you can trust and rely on them. Now, tonight's class is being recorded. And if you'd like to see a recorded version of this class, you can either use the link you use to come to tonight's class, or you can go to investing.com. Give them several days or a week to get it edited and up there. But you can go to investing.com where you signed up for the webinar and go under the education tab and then look at webinars on demand. But you can see an unedited version tomorrow by using that same link used to come to tonight's class. Now, since Alvexo is a regulated provider, I need to give you a risk warning. So let me read that and get it out of the way. Trading Forex, CFDs, and spread bets on margin carries a high level of risk and may not be suitable for all investors. You may lose more than your initial deposit and could be required to deposit additional funds. Please ensure you fully understand the risks and take care to manage your exposure. So let's get forward talking about candlesticks. Now, candlesticks are part of a charting system. And these charts, these candlestick charts, were developed in the 17th century. So as you can tell, they're very, very old. And they made it to the Western world just in the middle of the 1900s. But most people didn't use candlesticks because up until recently, we were doing all the charting by hand. And drawing a candlestick on a chart was time consuming. And when you're doing all of your hand charting, it was just too much to do. So only specialized traders used candlesticks, but they were very successful. But today, with all of our computerized and Java and HTML charts, it's made candlesticks much easier for us. And it's moved now to the mainstream and become, with the growth of online trading, one of the most popular charts available, or financial charts available. Now, a lot of traders mix up candlestick charts and understanding candlesticks. Many of those believe that when they see lots of red or lots of green, this means buy or sell. But this isn't the truth with candlesticks. Okay. Candlesticks can be very, very helpful, but you have to learn how to read them and interpret them. Now, each candlestick represents a data set of complete price action during the time selected. So the time frame can be anywhere from a few minutes to a month. But each candlestick you're looking at contains 4 very valuable pieces of information. They contain the open, the high, the low, and the close for that time segment. So if we're looking at a 1-hour candle, at the beginning of that 1 hour, we would draw a line across at the open. At the end of that 1 hour, we would draw a line across whatever price the asset closed. We would then put a dot at the highest price that asset reached and a dot at the lowest price that asset reached. We do exactly the same when we're putting a bar chart on. The difference is with candlesticks is we actually connect the open and the close to draw what's called the body of the candle. Now, if we step down the ladder, in other words, the close was lower than the open, we would fill that candlestick in today's market with red because that was a bearish price segment. If the close was higher than the open, or we had stepped up the ladder, we would fill that candlestick in with green. Now, a lot of times when you're learning about candlesticks, you'll hear about white and black. Okay. Because prior to computerized charts, and you were hand charting, we would fill in the candles. If it was a bearish time segment, we would just use the side of the pencil and fill in that candle. So a black candle or a black body would represent a bearish time segment. And if you left it white, it would be a bullish time segment. But whether it's black and white, red and green, it doesn't make a difference. If you wanted to use pink and purple or orange and chartreuse, it doesn't make a difference. As long as you know which color signifies bearish and which color you're using to signify bullish. Now, if you notice in the little drawing, we had a long candlestick, the other one we had a short candlestick. Now, candlesticks are, unfortunately, like I said before, not about the reds and the greens. They're about the size and the shape of the candle, how it sits in relationship to the previous candle and the next candle, and where it sits in the trend. Okay. Not the reds and the greens, because the first thing the candlesticks do, and it's really about the reds and greens, tell us the story of the fight or the ongoing battle between the bears and the bulls. And there's really 6 different interpretations. So as you can see here, these two are just the difference of black and white. These are 2 full-bodied candles with a short wick above and below. This tells you in number 1 that the bulls controlled the marketplace and they were in control of that game or that play. When it's the black candlestick, or the full body, okay, it tells you that the bears were in control in that time segment. When you get small short bodies, okay, it tells us that nobody was absolutely in control for that session. Now, when we have a small body, black or white, or red or green, that's very small and very short wicks, that tells us that nobody was in control and nobody had any domination. So if you imagine a tug of war and there's 10 people on one side, 10 people on the other, and they're pulling that rope on either side. And at this point, the bulls and the bears and the guys and the girls on the left and the right were pulling, but nobody moved at all. That's 3. Number 4, we have a long lower shadow. That tells us at some point the team on the right yanked really hard, pulled the team on the left over and started making headway, but the team on the left eventually recovered, pulled everybody back, and they ended up where they started. So that's how you interpret. Number 5 is the exact opposite, the team on the other side. Because whether it is red or green or black or white, it's showing you, because between the open and the close, there was no difference, or virtually no difference, that the ultimate was that there was no decision, nobody in control. And number 6 tells you the same thing, that the team on the left pulled really hard, they did very well, and then the team on the right yanked back, but at the end, they ended up where they started. But this is the story of the bulls and the bears and how you can interpret just the battle that went on during that session. Now, once we determine that battle, we can start interpreting some other patterns that we see. One of the most popular and most talked about is called a Marabuzo. Now, can you look at this little diagram and tell me what you notice? Especially what you notice that's different from the candles over here. Now, they're very much like 1 and 2, except there's no shadow. There's no wick. In other words, there's no higher or low, but there is a higher low. In the bullish candle, the green candle, the markets opened at the low and continued up from that open to the very second that time frame ended. So that tells you the bulls were not just in control, but they were in total domination. And the only reason the candle didn't continue going up is because the time element wore out, and we should expect it to continue going up or in the next candle. The reddish Marabuzo tells us the exact opposite. Now remember, candlesticks, there's always an exact opposite. So you have the bullish and the bearish. So when a bullish Marabuzo develops, and we see it in a trend, because we should always be looking at the relationship of the candles to the trend, it tells us when it appears in a downtrend or in a sideways action after a downtrend. When that bullish Marabuzo appears, means we're moving into a very defined uptrend, and that's what we should see next. We have the exact opposite with the bearish Marabuzo when it appears in a downtrend or after a uptrend and moves into a downtrend. But again, we have to talk about these always in relationship to the trend, because a bullish Marabuzo can appear in the middle of an uptrend. Now that's telling you the uptrend has some momentum, but it's not really telling you anything else. It's when it appears at the end of the opposite trend or the end of congestion. Then we also have spinning tops. Spinning tops look very much like the indecisive candles that we saw on the other one, and the story of the bulls and bears. So candlesticks with long upper shadows and long lower shadows and no small real body are called spinning tops. One long shadow represents a reversal of sorts, and spinning tops represent indecision. And then we have one of them, it actually appears quite often and is talked about a lot, and that's called a doji. Now, a real doji looks like this. It's been modified to fit the world that we trade in today. And it's been modified a long time ago. It wasn't modified last week. The rule of a doji was that the open and the close had to be the same. That worked very well in the stock market, where a stock was trading at 149.50, especially in the old days, and it only traded in 25 cent or 50 cent or sometimes $1 increments. And therefore, the open, the close could easily be the same. When we start talking about agriculturals, or especially Forex, which Forex trades in 4 digits to the right or a pip, well, it's really hard to get it exactly that the euro is at 132.174 and is at 132.175. That's such a tiny little number that we've modified it that it can have a little tiny body, which is simply the difference between the open and the close. But it should be virtually nothing. And this is telling us there's a complete standoff between the bulls and the bears. And in fact, most of the time that asset hasn't made any progress at all in that session. Now, because dojis do appear quite often, we always have to look at that in relevance to the trend. So the relevance of doji depends on the preceding trend and the preceding candlesticks. After an advance, or a long white candlestick, a doji signals that the buying pressure is starting to weaken. After a decline or a long black candlestick, a doji signals that selling pressure is off. Now, I know we're talking about a lot of weird names. Dojis, marabuzos, spinning tops. We're going to be talking about a lot more. The fact is, you don't have to remember the names. You have to be able to look at a candlestick and be able to interpret what it says. Now, not all of us can remember them all. Believe me, there's some that, because we're going to go on and talk about haramis in a short minute. We're going to talk about double, triple soldier, 3 black soldiers, 3 white crows. Okay, as long as you remember when you see the pattern, what the pattern's trying to tell you, and you can always use cheat sheets. So I've given you those as handouts. Now the handouts you have right there tonight. Okay? If you don't download them, you can't get them again. But this is not private information. This is not something that I've made up. You can go find this stuff on the internet, go search for candlesticks and look for the top patterns and what they look like and what they are. They're all the same. It's not a personalized decision. These are how candlesticks are read. So if you don't download them, just look them up on the internet and you'll get them. But don't get yourself flipped out over all the names and all the specifics, all the different weird stuff we're talking about. Okay, it'll take you some time, and because the hardest part is seeing them actually on charts and recognizing them. Now here we can see the doji. We saw prices moving in a downtrend. So price moving in a hardcore downtrend, bounce back up to the trend line, and the doji appears. So that's telling us this buying pressure that's pushing it up has eased off and is moving back into its retracement and back to its regular trend. Here we actually have a spinning top. Okay, so we always want to see where they're developing in relationship to the price action and the trend line. Because you can't just blindly see a doji in the middle of something and say, and dojis appear quite often. So before turning to the single and multiple candlestick patterns, there are a few guidelines we need to cover. Now that you have a basic idea what candlesticks indicate with their bodies and their wicks, let's cut our teeth on some simple, uncomplicated candlestick patterns. And these are fairly common, and they will quite likely appear before you in normal trading sessions. So knowing instantly what they mean and taking the proper trading decision immediately could make the difference between a winning and a losing trade. So remember, we talked about positions of candlesticks. One of the classic positions is called a star position. I pay no attention to it. I don't even see these position ones are very hard to see, and it's up to you if you want to, how much effort you want to put into finding them. But a star position means that the next candle looks like it gapped up from the previous candle and looks like it's floating above or below. The fact is it can't gap up because the open and the close will be always the same, but it visually looks like a gap. Okay. Then we have shooting stars. Shooting stars are basically in a star position, but they have they're just like dojis. They have longer wicks in either direction. So some are called shooting stars. The opposite called inverting hammers. Then we have hanging man. Okay. It's all depending on where the body and the wicks stand. Okay. And these are just names that have been given to small bodies with shooting stars or large upper wicks. Okay. And appear in an uptrend. Inverted hammers are the same thing, but they appear in a downtrend. Hanging men just have no high. So they look like a hanging man or a hammer. Okay. They're on those sheets I gave you with the explanation and where to see them. But again, it's in relevance. Single candlesticks have very little meaning. Okay. It's where they are in relationship to the previous candle and the prior candle, and not even in most cases the color difference. So in this case, there's no hard and fast rule about what color a hammer or a hanging man should be. The fact that they have short bodies already means there's indecision coming into the market. However, a green hammer or a red hanging man are stronger indicators in the direction of the trend. So again, we're always looking for where they appear in relationship to the previous candle, the next candle, and in the trend. Now, one of the most common positions, and one of the few that I rely on a great deal, is called a harami. Okay. It's not very complicated. Harami in Japanese means pregnant. It means that the current candle is fully engulfed in the body of the previous candle. Okay. Not the highs and the lows. So imagine a pregnant animal, a pregnant woman, the body of the baby is fully engulfed, not sticking out at her head and down her lower leg. It's fully enclosed in the body of the parent. Okay. So it means that the new candle, including its highs and its lows, are fully inside the body of the previous candle. Now, my rule of thumb is they need to be opposite color. So in other words, the previous candle was a white candle or a bullish candle. The next candle needs to be a bearish, or the opposite is bearish and bullish. Now, there are a lot of people and a lot of rules that say it doesn't have to be. A harami forms, and you have a harami, whether the candle's the opposite color. It's the value that you give that harami that makes a difference. A harami is one of the most common candlestick patterns you'll come across. So it's important to recognize and to understand what it means and to understand its limitations. A harami is a two-session reversal pattern. It's made up of two candlesticks and implies that the price is about to turn. It is indicated by a small body of the opposite color completely contained in the body of the previous session. It is not essential for the two candles to be of opposite colors, but this tends to give it a more reliable signal. Now, I'll be blunt with you. A harami doesn't always live up to its height. While it's touted as a reversal indicator, that means the trend is about to reverse. You may find yourself disappointed by its reliability. And this is one of the reasons where I only use the opposite color, because I want high probability results. So yeah, I find with harami, if you keep all the rules in place, every bit of the current candle must be contained within the body, not even a pip outside, and it needs to be of the opposite color. So we've talked about building a candlestick chart. We've talked about reading the candlestick. We talked about the shape and size and the formation. We talked about dojis and haramis. Talked about shadows or wicks. Talked about the bulls and the bears and the hammers and the hangman. That's a lot to talk about in a half hour. But we haven't even touched on the more important candlestick patterns. Now, the chart you see up on your screen, I didn't make up. I just copied it for you. So when we see on the left-hand side, lonesome cowboys, 2 for tango, 3 musketeers, they're not my words. I call them singles, doubles, and triples. Because as I've been saying all along, it's more important about where the candlestick stands in the trend and how it appears in the previous and the post candlesticks. So we've already talked about the single ones, the standalones, Marabuzu, spinning tops, dojis, hammers, hangmen, inverted hammers, shooting stars. They appear quite often. They're one candle. We don't give that much magnitude to them, but you should be aware of them. From there, we go to the 2 candlestick pattern. This is bullish engulfing and bearish engulfing. These are very important patterns you should be able to recognize at any time. And then we have bullish tweezers and bearish tweezers. They rarely appear. You should be aware of them. Again, they're on your handouts. Then we come to the triples. Triples are 3 candlesticks together and they must form a specific pattern. Morning stars and evening stars are very complex, and they're very hard to see. So they're overlooked quite often. 3 white soldiers and 3 black crows are very, very important. And then the 3 inside up and the 3 inside down are almost the reverse of the morning and evening star, and they're still very complicated to see. Now, bullish and bearish engulfing signal the end of the current trend. And they're very much like their name. A bullish engulfing means that the current candlestick is bullish and it appeared after a bearish candlestick. And the new candlestick is the high and the low and the body, but the high and the low are fully engulfed the previous candle. And that's telling you that the trend is over, because in a downtrend that was continually down and we still had a bearish candle, that at this point the bulls came into the market and took over. Now, it's not saying it's going to reverse directly into an uptrend, but it's saying the downtrend is over and it will most likely move into an uptrend, but it probably will go in, it could go into a period of congestion for a while. But bearish engulfing is the exact opposite. But they have to appear within the bullish within a bearish trend or a downtrend, the bearish engulfing within an uptrend. Now, bullish and bearish tweezers, as you can see in the little chart on the right, the odds or probability of them happening are very small. The bodies of each candle are the same exact size of the opposite color, but the wicks, the lows, were also almost exactly the same, and they form a pattern that looks just like a pair of tweezers. Now, as I mentioned, morning star and evening star are very hard to see. The morning star, the star after the morning, starts after the night and before the next day. Okay. A morning star shown on the trading chart comprises of a long red candle that follows from the previous downtrend, followed by a full body candle whose open gaps down from the previous candle. The third candle is a power green, which is also opens gap up, and whose close is about midpoint of the first red candle. Okay, I pay no attention to it. If I would have looked for it all the time, I'd spend so much time looking for it, it would never happen. But you need to be aware what they are, because I'm going to show you some easy ways to actually identify these patterns without doing much work. So the morning star and the evening star are the exact opposite. You have to learn the rules. They're on the handouts I gave you. So again, to summarize, the first candle is a long green candle during an ongoing uptrend. This candle represents strong bullish sentiment. The second candle is a very short body candle, which can be either green or red with long wicks or shadows. This candle represents sudden break in the bullish trend or indecisiveness. And the third candle is a red candle, which is more than half in length of the first green candle of the pattern. This candle represents a comparatively strong change in the sentiment towards bearish. Then we have 3 white soldiers and 3 black crows. They're pretty easy to see. They're pretty easy to deal with. Okay, as you can see, they are 3 green or white candles, one after another, each stepping up higher than the previous, and that appear in a downtrend. That's telling you that downtrend is over, and the bulls have moved into the market. And basically, they've disseminated any bears still left. And you can expect the asset to move into a uptrend. Now, we call them 3 white soldiers. Remember, I explained to you, bullish, we would not use, bearish, we'd use the side to pencil to make them black, and bullish, we would just leave them hollow when we were doing charting by hand. Today, we could call them 3 green soldiers, but it doesn't sound right. 3 black crows are the exact opposite. And then the 3 inside up and the 3 inside down. They're just as complex as the evening star. Okay. What you have is, in an uptrend, you still have 1 bullish candle, then you have a bearish candlestick, and then you have a second bearish candlestick, it's 2, where the 2 candlesticks together exceeded the length of the body of the previous green bullish candle. That's telling that uptrend is over, moving into a downtrend. So now when you've gone through all the various candlestick patterns, and there are 32 main patterns, there's 16 top level, 16 secondary level. But you know, all of us are going to stop it. I'm too confused with all these funny names and shapes. Can't remember any of them. So remember, each candlestick is just an observation and explains to you market sentiment. Each candle of a chart is a reflection of the market sentiment. It's not just the standard patterns, but with keen observation, you can master the art of trading by looking at charts without even remembering the name of the patterns. Now, candlesticks should always can be combined with other indicators. Candlesticks work great with support and resistance and trend lines. They also work great with chart patterns. But perfect patterns rarely appear in the modern market environment. So learn to execute company comfortably. Okay. Pattern recognition doesn't work for everyone. Okay. Exercise patience after the pattern breaks up or down. Okay. Now, I'm going to take you over and show you an easy way to do this so you're not freaking out over this stuff, and may help you want to incorporate it into your trading system. So right now I've got candlesticks on TradingView, tradingview.com, which is a free charting service. Okay. And almost every charting service or chart out there today offers a way to do that. We're going to go up to indicators. We're going to go down to public library, and we're going to scroll down to candlestick patterns identified. And look at that on that chart. Now you see every candlestick pattern is developed on that chart for gold futures, and I'm using a 30-minute chart, all over the place. You see the charts inundated with them. So sometimes it's more than you can deal with, but you don't have to look for them that closely. And most of the charting services will also allow you to pick and choose what you want to see. So we can click off dojis. He said, I don't use the evening star, morning star. I don't use shooting stars. I don't use hammers. I don't use inverted hammers. So I just turn them all off. I like haramis. I like bearish and bullish. I don't use piercing lines. And you can keep on coming down and deciding which ones you want to monitor. Once you've set this up once and saved it, you never have to worry about it again. And how you want them depicted, where you want them. Like, see, I've got doji, and in my doji, I only wanted a star, and it goes above the bar, and it just puts a star there. You can decide exactly what colors you want, how you want them laid out, how you put them on charts. Oh, I didn't click. But then you'll get them the way you want them on your charts. Also, if we go over to investing.com, who also powered tonight's class, and go up to, just click on any asset. We'll go over to Forex. We're going to click on the euro US dollar in this case. Okay, we're going to go up here to technical, and we're going to click on candlestick patterns. And now look at that. It's put the candlestick patterns on the euro US dollar, whatever chart we're going to look at. Okay, so all we have to do is, here's a harami, a bullish harami. It appeared today at 8:30 in the morning, and we can have, and it also puts us down here in the bottom and tells us all on the euro US dollar, all of the candlestick patterns that have appeared. We can customize this by telling it only what type of chart, what time frames you want to look at. Whether you want completed, emerging patterns, bullish, what level. You can just tell you only want the high level, and that's all that appeared. So it's telling us in the last hour we actually have one developing. We have a 3 inside down developing in the current candlestick in the 1 hour chart. So we go over to 1 hour chart. And right now we have the 3 inside down developing. So what is that telling us? That this uptrend is about to end. And if you're not sure, just click on the button and open up, and it's going to tell you this pattern is more reliable in addition to Harami patterns, and it tells you what to do with it. And you don't have to use these charts, but you can use investing.com to locate the patterns and then just put them on your charts pretty easily. Okay, so it's giving you all the information here. There's another way that you can use investing.com. And if we just go up to technical indicators and go under candlestick patterns, we can set up all the assets we want to track, what patterns or what level of patterns, all the other information. So you can see all the charts, and then just click on apply, and it's going to tell us all the candles that are developing, whether emerging or completed patterns, in the time frames that we clicked on for the different assets. So we can see Ripple Bitcoin right now has got a 3 inside up. We can see the Euro US dollar, which we just knew about, 3 inside down. And we can have them all here. We can see what it's predicting to do. And then we can, learn about this or understand it, put it on our chart, our regular trading charts, and have it. So you have many choices. You can either use the ones on TradingView, use the ones on investing.com. You can download apps to do them. There's all kinds of things. So once you've learned how to use the candlesticks, you don't have to spend your time searching for them in the marketplace. Okay, because yes, in the old days when we had to go spot them and see them in the markets, it was a mind-boggling thing. That's why you could only trade so few assets. Today, everything's fairly easy for you, and you can start incorporating candlesticks right into your trading. So try out investing.com, the 2 different ways you can access them there. Try TradingView, okay, and then just transfer them over onto the Alvexo charts and start adding candlesticks into your trading. You have all the handouts. Don't let all of this stuff freak you out. You'll be surprised in no time flat you can add candlesticks into your trading. But please do not think, I know all about candles, so since I see lots of green, I'm going to trade that asset going up. Psychologically, we react to the reds and greens, but understand that once you've learned how to master candlesticks and candlestick charting, you can trade them with a lot of success. Also, understanding the wicks, the patterns, where pin bars are, how you can use them with support and resistance, okay, and how these can help you in your trading is worth the time and the effort to put into it. So thank you very much for joining us this evening. Thank you for supporting Alvexo. And again, go to www.alvexo.com, open up a demo account, just a couple pieces of information, no credit cards required, no deposit required, and you can start using their demo account and trying out candlesticks. Okay. And remember, use investing.com's candlestick pattern because they're not open to subjectivity or interpretation. A pattern that appears is a pattern that appears and appears on whatever chart you're looking at, whatever service you're providing. So picking them up off investing.com and then putting them onto your own chart just means you're just doing that one other step, but you're not spending hours looking at them. Here, let's just pull up the Euro US dollar, USD. Okay. And as you can see, we had the same pattern in the 1 hour US dollar here as we did over on investing.com. Okay. It looks exactly the same. And we know we have that emerging current 3 inside down taking place. So all we have to do is now watch for this candlestick to finish developing and decide how we want to trade it. So on that note, I'm going to say goodnight to everybody. Thank you very much for supporting both Alvexo and investing.com, and slowly add candlesticks in your trading. Learn the interpretation. They don't have to learn the names. Learn what the patterns are trying to tell you, and then incorporate them into your trading. Don't go off reading all these strategies in the internet and following all these people, these gurus trying to preach this stuff. Learn the patterns. Learn how to recognize them. Then, once you've got that down pat, going over and learning how somebody uses pin bars into their interpretations, fine. But first, master candlesticks and understand them on your own. Thank you very much. Have a great night. And thank you for supporting Alvexo and investing.com.